I hope you can all hear me.
Yes, you are loud and clear. We can see your screen as well.
Okay, fantastic. Andrew, can I ask you to manage the waiting room, please?
Yes,
Okay, thanks, guys. I was just clearing up my screen. Okay. Welcome to the commercialization and sales topic for BIMALab 2025. And it's my pleasure to be with you today. I will be joined at some point, whether today or in the course of our sessions over the next weeks, by a consultant friend of mine called Ken Timber, and I will introduce both of us. But first, I think most importantly, is to let you know what we'll be going through over the next 4 weeks or so. We should be meeting on Thursdays, and then towards October, I believe we shall be meeting face to face in Lusaka. So also really looking forward to that. If at any point you have any questions, please raise your hand. This is supposed to be an interactive session. If I'm speaking too fast or something is not clear, please stop me so that we can clarify that. Our sessions will, I know we have booked 2 hours. They will tend to be about 1.5 hours long, and with a short, break in between, about 10 minutes, just to stretch our legs, so that we continue to pay attention. I know for some of you, it's late in the afternoon. You've been busy already, chasing down business and all that. So I appreciate that. You might not be as attentive as you'd love to be, but so I'll try and keep this as interesting as is possible. So let's go through our topics for the following weeks. So today we will cover 2 topics. So market problem fit and channel strategy. Channel is missing there, but it should be channel strategy. So we'll cover those 2 topics. So we'll take market problem fit as the first section. It'll probably take us about an hour. And then channel strategy will probably take us about 35 minutes, and we should be done for today. Please feel free to take notes. But I will be sending the slide decks after this. And let me say now that we had some communication that came from the other Andrew regarding one-on-ones, the possibility for one-on-ones. After this, I will share my Calendly email address. I am available on Tuesday afternoons for one-on-ones with organizations. I already have had some in the last 2 weeks. So please take advantage of these to connect so that you can raise issues that might be more pertinent only to your organization. Andrew, I don't know if you're still there, but please help with the participants in the waiting room.
Yes, I'm still here. I'll do that.
Okay, thank you. And I can see my co-host, Ken, has joined us as well. And so maybe I think the first thing to do is, like I said, just go through the structure of the next 4 weeks. So we shall be having next week, next Thursday, we'll be looking at B2B partnerships and how we can structure those to be most impactful for what it is that we do. Week 3, we shall look at sales, really the science aspect of sales. I always say sales is a science and an art, but we'll be looking at the scientific angle of sales and what you need to set up to help you manage your engagements and grow your business. And lastly, in week 4, we shall cover negotiations basics and strategic preparation for the same, and then how to practically apply these things and close deals. Without closed deals, of course, your businesses will go bust as soon as you extend beyond your initial funding window. So without much ado, let's go into the learning objectives for today. So the first topic, like I mentioned, is market problem fit. So we are going to relook at your product solution fit without the bias of the solution. Many of you guys who are here probably, tech have a bias towards the tech side of things, and that's what you're bringing to the table as in InsurTech. That is the value that you bring to the table. And often we find that tech people tend to look at things through the glasses of technology. And now we're trying to see how can we reset that view so that we can look at what the customer's actual problem is and how we position the value of the solution that we bring to the table through the customer's eyes. So the learning objectives here will be to critically reevaluate our product solution and develop a sharper value proposition. You may think, okay, we have already done this. If you have, fantastic. If you have not started, then this will be, obviously something that's important for you. But I think everybody, irrespective of where you are in the stage of your business, will probably get some benefit from the way we shall approach this, because this is, again, something that should never be static. Your value proposition should never be static. It changes depending on the maturity of your business, the maturity of your customer, the buyer that you're positioning your solution to, so on and so forth. So that keeps changing. So you should always try and keep reevaluating your value proposition. The second topic is the channels to market. And here we shall, answer the fundamental question around whether you are a disruptor to the industry or you are a collaborator helping the industry work better in what they do. And the learning objectives here is to try and map existing channels to market and then define your market position and see how you can strengthen that so that in the future, as the market changes, you don't find yourself without viability, without being able to remain relevant in the market. So with that, I will do just a quick intro of myself. My name is Andrew. Some of you, I think we have met already in the last couple of weeks. I'm the managing partner of a company called Leapfrog Advisory. We are a boutique consulting house, and what we do primarily is settle technology companies, help technology companies come into markets, primarily around East Africa. We manage their positioning, product positioning, their go-to markets, and also partnerships where necessary. So that is what I do. I've been doing this for now actually 30 years, believe it or not. I've been in technology sales for 30 years this year. So it's been a while, and this is something that we have been doing for a bit, and we hope that we can bring some of this value to you. On another hand, I also sit on a number of advisory boards, and one of those is one of the leading insurance companies in the region, part of an Africa-wide insurance group. So I do have a bit of a perspective of the challenges that the industry is facing, specifically in insurance, and looking for growth and how they can use organizations such as yours to get to the market quicker or not be disrupted by people like you who are in the insurtech industry. So now I'll give the floor to my co-consultant. His name is Ken Thimba, and he'll probably be able to say a couple of things about himself. Ken, if you're there, please, the floor is yours.
Okay. Hi guys. Like Andrew said, my name is Ken Thimba or KT. I'm lending a hand here with my experience. In much the same way Andrew has spent, I didn't know it was 30 years in tech sales. Okay, but yeah, looking back, yes. I've spent the last 30 years in hardcore insurance selling. That means knocking door to door, looking for leads in all types of places, from churches to obituaries to rugby clubs and so on and so forth. So I'm here to be able to assist with the knowledge base of the insurance industry in Kenya, in East Africa, across Africa. I've spent a bit of time working with some startups on their route to market or go to market strategy. I've spent some time also with an insurtech looking at the same sort of problem, because one of the biggest challenges that insurance faces in Africa is distribution. And to me, distribution is key, and the introduction of technology to distribution then can be the game changer. An example is Kenya's insurance penetration is roughly around 2%. So when Andrew is saying you guys have to decide whether you're going to be the disruptor or the collaborator, if your strategy is, say, a collaborator strategy, what are you adding to the insurance company? If you're adding a problem they already solve, like claims and so on, unless you're making it faster, it may take you longer to hit the ground running. But if you go to the same people with a collaborator strategy that increases penetration, then everyone is going to listen to you. But at the same time, there's also a trust issue. And one of the things that I'm looking at tech to be able to solve is the trust issue. So when you're coming up with your solution, start thinking about the real pain, like Andrew has said. What's the real pain that you're solving? Have you spoken to those individuals out there and say, yes, I'm taking insurance because of one thing or the other? So I'll be helping with those sort of client-facing conversations, what goes through the mind of the client and so on and so forth. But happy to be here. Thanks.
Thank you very much, KT, as we call him. And I can see he's struggling because some of my close friends call me Forrest. He's trying to keep that out of out of the picture. But KT, I give you permission. You can call me Forrest in this forum. We are amongst friends, I believe. One of the things that KT hasn't called out is that he is a blogger and thought leader. He's got something that he calls the Sales Fundi. We shall share details of that. He sends something out every week, and it's really something that Earth's just kind of brings together the issue of life and how life also kind of merges with day-to-day work experiences, especially around sales. So very, very interesting. And another thing that he didn't say this time, that he actually coached the Kenya national rugby team since for 2001 to 2004. An astute rugby player from back in the day, but that's Ken for you. So guys, without much ado, let's move on to what we want to cover today. So first things first, I'm sure many of you probably started your engagement with understanding the technology and how the technology could probably sort out a problem that you saw in the industry and went on to deliver it. Unfortunately, what tends to happen, and this is purely a human aspect of how we think, because you're technology experts, you tend to then, kind of fall back on the technology over time. And before long, you're talking about the bits and bytes and the speeds of the technology that you bring to the table. and kind of forget about the problem that you are trying to fix for your customers. So there are many, many examples, and that's one of the reasons why KT is here, and he's already kind of alluded to some. Penetration remains a big issue across Africa. I think the countries that have the highest penetration are probably in the North African space and South Africa. A lot of this is driven because it is mandatory. It is driven by employment, so on and so forth. While with the rest of us in the rest of Africa, as we like to call it, because a large part of the population is either self-employed or work as casuals, so on and so forth, insurance doesn't really work for them, or it is not something that is seen as important. We have the additional advantage of being African. I think the Zulu word Ubuntu, which kind of puts this together, which is I am because we are, and Ubuntu is what comes to be when anybody that you know is going through a struggle. So say I'm sick, I reach out to my friends, I raise some money, I go to hospital. And this scenario is repeated thousands, if not millions of times every day across this continent. So the society acts as your insurance policy. This tends to be a very expensive way of pulling out of whatever trouble that we have. But it is the way we look at it, because we are struggling with limited amount of resources in terms of the amount of money these individuals have on a day-to-day basis, and then prioritizing where that money is going to go. Should it go to food? Should it go to education? Should it go to a roof over our heads? So insurance tends to be the last thing. And I'm sure for many of you, that is the approach that you're looking at transforming how insurance lands in Africa, because you're saying, hey, one of the best ways to improve penetration is to go after this kind of bottom of the pyramid, as it is called, and see how we can pull these people into the insurance economy. So let's take a step back and understand how we can improve our value proposition. And we'll do a bit of a tag team with Ken over the slides over today, this evening. But initially, I'll look at the challenge, and I'll ask KT to speak to the opportunity. But often, like I said, you find that you have a solution that is now looking for a problem. For those of you who are a bit of car buffs, you might be aware of, I think it was the mid-2000s, when BMW famously introduced the round automatic gear change lever. And it was called exactly that. It was a solution that was solving a problem that nobody had. Little did we know that over time, that then became the norm with not just the BMW and Range Rover set of vehicles, but with many other types of cars. So sometimes the technology can be ahead, but we have to keep reminding the consumer what it is that we are bringing to the table. So digital transformation can be helping with the customer experience, enhancing customer experience through innovation, by bringing insurance closer to me. I can give you hundreds of examples of poor customer experience with insurance companies, including my own, where I work. They streamline business in operations. So this is in the background. So this may not be felt directly by the customer, in terms of their experience on a day-to-day basis. But for example, could be an issue of how fast is my claim processed, and how quickly do I get paid? And moving from the days when computers were not, the norm, claims could take months to be processed, and now many organizations talk of hours. It obviously reduces operational costs. It delivers data-driven insights. It makes insurance more mobile and adaptable. And these are all things where, because we are talking to an industry that has been traditionally very technologically backward, I think the insurance industry is only now starting to understand how much they can use technology to make themselves more visible to customers and more adaptable to their business environments. So this technology bias tends to lead to misalignment of products. And this misalignment may not necessarily be misalignment between what you're bringing to the table and what the customer needs. And I want you to keep this in mind. It may not be that misalignment. Your product may actually suit the customer needs and fix whatever problem or pain that they have. The problem could be even how you verbally or how you engage, how you sell, how you talk about what your value is. And that's where the break sometimes happens. So insurtechs face challenges because obviously, number one, their principal customers, whether it's B2C or B2B, tend not to understand the value of insurance and technology. And then secondly, because you also have a very highly regulated environment, industry. So Katie, you want to speak a little bit about the opportunity?
Yes, and thanks, Forrest, for allowing me to call you Forrest. So for those guys who might not know, Waitito in our African language means the person of the forest. So usually we turn traditional names into English. I don't know why, but anyway, let's talk about the opportunity. And I'm just thinking about the different people who are here and insurance penetration in those areas. So we have, for example, in Kenya, a penetration of 2%, which is, I think, cuts across Tanzania, Uganda, a bit of Somalia. Ethiopia, I think it might be lower. In Nigeria, it's 1%. South Africa was about 15% last I checked. In Northern Africa, I think it was higher, especially in Egypt. I'll just confirm that. But the opportunity that we face is the one that was faced by the first guy who came to, we are told, the person who came to sell people shoes in Africa. One guy says they don't wear shoes. That means there's no opportunity. The other guy says, hey, they don't have shoes. So we have a huge opportunity to sell them shoes. And we are that salesperson. So when we're talking about true innovation, is to understand those unmet needs. Now, what I think insurance hasn't been able to do quite well is to weave itself into the cultural fabric of Africans. Forrest talked about the cultural context and how the social groups come together every time there is a disaster, there is a problem in the family, there's an ailment, someone has lost something, your house has burned down. We can always rely on the community. But more and more, the community is finding it difficult to, again, come together and contribute money, especially if, for example, the person they're contributing for should have known better or in their view has money. So one of the things probably you would want to look at is in understanding the unmet needs is, and we had a session earlier this week with some guys from DRC, and it was very interesting. I don't know, I believe all of us have seen the Ghanaian video of guys who carry coffins and the celebrations around funerals. In Ghana, it's huge. In Kenya, it's huge. In Nigeria, it's huge. So those are cultural practices that if we wove ourselves into, we can be able to give them the benefit of insurance. And something as basic as just funeral insurance. It's very big in South Africa. It's very big in Zimbabwe, but it's still not even at 20%. So how do we weave our solution to meet that need that, yes, if someone passes away, we usually, in Kenya, there's one particular community that slaughters bulls and so on. It costs a lot of money. There is insurance protection, but part of the problem is how it is communicated. And to me, this is where tech comes in, because you guys are the game changer in being able to provide a different language from the one that has been used. Again, my interaction with the guys from Republic of Congo, they have an interesting name. They call insurance protection or protection. To me, I thought that was brilliant, because if you go to an African family and you say that I am offering protection, it means something totally different from I am offering insurance. So we have the unique opportunity to be able to frame what insurance is into our own African cultural context. And by doing that, we'll be able to reach out to people, and people will then say, yes, I would. No one would say that I do not want protection. That means your communication then becomes a lot easier. So part of what technology can do in understanding the unmet needs, one of the unmet needs is, why is this thing so complex? How does it work? So how are claims paid? The simplest insurance process is, or rather product is, funeral expenses or personal accident. It's just a one-time payment based on one document. In the event of death, there's a death certificate. It allows you to be able to make a claim. So what are those unmet needs? Are the unmet needs, like Forrest explained, a long claims process, a confusing claims process? How do we make it simpler so that we gain trust? And you are uniquely positioned to be the deliverers of that message of trust. So maybe it's looking at those pain points and asking ourselves, is the pain point claims payment? There's a very successful company here in Kenya, a betting company. And how they grew their numbers was that the moment you won, they would send you a text on your phone, and they would also send you through mobile money your winnings. You would get your winnings immediately on your phone. And that became a game changer in the betting industry. And these guys were first, they were first to market with that solution. And that was what has made them even grow to the level where they were even sponsoring Formula One. So let's think about the opportunity. What are those unmet needs? It could be a simple process that you solve that makes the customer happy and will allow them to refer someone else and the next and the next. Yeah, I'd like to just stop there.
Thank you. Thank you so much, KT. So let's delve a little bit into this uncovering of the customer's core problem. And what I want to speak to here is something that we call the empathy map. And I'm hoping that many of you have heard of or even utilized an empathy map as you start to uncover what the customer is really suffering from. And here I use customer very loosely. So whether your customer is the insurance company, because you're selling, your value is in improving the underwriters' engagement in the market, or whether you're doing B2C, where you're selling something, a product directly to an end user, an actual person on the street, you really want to think about how you use a framework around really listening out to what customers think, feel, say, because that is what will help you uncover their unspoken needs. So two things that we are trying to do here is figure out what are the unspoken needs, which are the pain points of the customer. And KT has given you a number of examples. He talked about a certain community in Kenya who, as part of the celebration of life, unfortunately leave the family of the person who has passed on many times destitute, because they will eat all the animals in that house, the cattle, the chickens, the goats, whatever it is, as part of this celebration. They will, you know, the funeral will also consume a lot of cash in terms of preparation, especially when the person is an important person, because they say they cannot have a small funeral. Yet these are the same people who are not contributing towards that funeral. So if you're to speak to this community, there is probably an unmet need that they don't realize because it is just part of their custom. So how is it that you can really bring that out so that you understand it? So empathy mapping, they say, is a collaborative way that helps teams or individuals understand perspectives by documenting what the customer are actually feeling. So you have to build a set of questions, and these are open-ended questions. In sales, we always talk about open-ended questions, not questions that can be answered with yes and no, that can help you dig deeper into what really counts for the customer. What do they think and feel? So that means you will give you an indication of what really counts. Their preoccupations, what keeps them awake at night, their worries and aspirations. Because these are the areas in which you can find opportunity for your product to show value. So for example, if I'm a casual worker, or maybe I'm in the gig economy, and I'm not sure if I'll have work next week, but I do have commitments, it's something that keeps me up at night. So I might consider someone who can come up with an affordable product that I can buy into when I do have a gig, that will allow me to get some money to live on when I don't have one. So it's like employment insurance, so to speak, that will allow me to continue eating something, having a roof over my head when things are a bit tough. There are things that people say which you have to be able to capture. And this actually, as you can imagine, all these things, will not go through all of them, but it really means that you really have to be empathetic. You have to open your ears, your eyes, to listen out for the environment that these people are living in, so that you can really uncover the unspoken needs. The jobs to be done, this is primarily for the B2B guys, because here you find that there's things that the underwriters, so to speak, have been doing over and over and over again, so much so that they don't realize that that work can be improved. Now, many of them are getting to it. So for example, I know some of you are working on fraud management. Some of you are working on you know, ease of onboarding of customers, so on and so forth. But once you understand what is the job to be done, then you can start to look at the value. But these two go hand in hand. So the empathy mapping and the jobs to be done. And sometimes the jobs to be done will be the things that will tie you back to empathy. The things that keep, for example, the CEO of a big insurance company awake, because you'll find that maybe his medical business is got a huge, or rather very small margin because of the number of payments that they have to make. So maybe the claim ratio is, you know, over 80%, which means that they have almost nothing to make when they cover their business costs as well. So he may not come outrightly and say it, because it may mean that he's giving up the fact that his business is not doing well when you tell him his claims ratio is at 80%. But if you come and tell him, I can, using my technology, I can improve your claims ratio by 4 percentage points, I can tell you now, there's no business leader in the insurance industry who will not listen to you, but you need to be able to prove it. So the second part of this is, what are the frustrations? And this is what you're really trying to get out with the empathy map. So you write down these frustrations, and in their words, not yours, and this is where I'm trying to get back to the fact that, many of you have already started businesses based on what you felt the industry needed, but you really have to go out and test this. So go out, speak to people on the street if you're B2C, speak to these business leaders if you're B2B, and capture these frustrations in their own words. Hidden costs, we have talked about that. So you really want to go beyond surface level needs to distinguish between stated needs and underlying core problems, because your value is in solving the core problem. Any questions before I move to the next slide? So this is what we call the value proposition canvas. And I would really like you guys, if you haven't used this before, take a screenshot. I will send you the slides, but use this as a simple way to try and map your value. I got this from interactiondesign.org, so you can also download it directly from there. And here we have the customer. There's two sides to this. On the right, we have the customer. The customer will be sold to gains. So for example, if you can improve my profitability by reducing the pain of fraud, then I will, that is value to me. But you need to understand what are the gains they're looking for, and really understand also what are the pains. As we mentioned, there are things that the customer is also doing on a day-to-day basis, the customer jobs. If you can add value there, then you're speaking again to them. So on your side, this is your side on the left, you have products and services. Your products and services either relieve a pain that the customer has or bring in gain that the customer was not seeing before, or you're improving the amount of gain. So very, very simple, but this mapping allows you to talk to exactly what the pain points the customer has, and you talk about relieving that pain. And by relieving that pain, you might be bringing in some gains, you might be creating new gains, or you might be improving certain customer jobs. I don't know, Ken, if there's anything you want to add here, or we can move on.
No, let's move on. Let's move on.
Okay. So when we talk about the value proposition canvas, I want you to think of this person here. This is a persona, he's a buyer persona. And remember, the buyer persona changes depending on who you're talking to. If you're talking to a CFO of an insurance company, the value points, the pain points, and versus the gain or the gains would be different from the CTO, the chief technical officer, or the CIO. They'll be different for the CEO. So your value, your products and services may remain the same, but you have to be able to speak to these persona, to the different personas in terms of what is important to them. And I hope that is clear. You must understand how your product increases gain and relieves the pain of that specific buyer, so that you're able to shift your language specifically towards that buyer, whether it's B2B or B2C. If you're doing insurance for B2C, the message for someone who is, say, maybe 20 to 30 years old will be very different from someone who is 50 to 60 years old. And you're still selling a particular product to an end customer, but you have to take into account the persona. I'll give you an example of Amazon value proposition, then now hopefully this will tie together. So this is Amazon. I'm sure you guys all know about Amazon. Their value proposition goes something like this. Our online marketplace helps shoppers who want to purchase goods online by offering a vast selection of products and a convenient shopping experience, unlike traditional retail experiences or smaller online platforms. So they have talked about their product. They have talked about the pains that they are relieving because they give you a vast selection of products and it's convenient. So there's gains there. And they have also thrown in a jab at their competitors. So the last bit on competitors, you don't have to do, but you have to speak to the pain that you're solving. It's always a good thing in terms of closing your value proposition. So as I said, a value proposition is a statement or short paragraph that clearly describes what service or business your organization offers, who benefits from it, and why it is beneficial to those people. So you want to typically follow this format, and this is what I said in terms of Amazon's. I'll say it again. Our online marketplace, that is the product or service, helps shoppers, that's the customer segment, who want to purchase goods online by offering a vast selection of products. Those are the problems that they solve, and a convenient shopping experience. So here, your verb is their verb is convenient. And then unlike the competing value proposition is walking to a mall and having to go all over that mall looking for all the different things that you want to buy. So I hope we are clear until this point, because I would ask you guys to give me an example of your own value proposition based on this currently as it stands. And I will randomly pick on someone, if you don't mind, from the people who are on board here. I can see we have Philip from Prepare Capital. Would you do? I'm sure you have a value proposition as it stands now. What does that sound like? If you don't mind sharing with the group.
Hi everybody. My name is Philip from Prepare Capital. So our product Jasmine is an AI platform. It helps financial institutions who want to lend affordably and reliably to smallholder farmers by offering them alternative credit scoring credit scoring figures or matrices that they can use to make financial decisions on how to lend the underserved populations like smallholder farmers or micro enterprises. Yeah, that's the overview, but the different use cases for our platform. Yeah, thank you.
Okay. Thank you so much, Philip. I know I put you on the spot there, and I really appreciate you playing ball. And I hope you can feel, even just from a Prepare Capital perspective, how you can probably sharpen that value proposition, because you can imagine if you're to walk into, the typical thing that they say, you walk into a lift, and in that lift is maybe some gentleman from, I don't know, Scandinavia, who's coming in as an investor looking for places to place their money, places to put their bets. And you have, one sentence to make this person excited about what it is that you do. So you did explain what it is that you do, because you provide better credit scores for financial institutions to do better lending. But you see, you have kind of, you've spoken about what exactly that you do, but you want to also speak to what pains are they suffering? Why do they need to lend better? Is it because you have fewer non-performing loans? You have a bigger loan book, or is it a multiple of both? So on and so forth. So you see how you can fine-tune this just a little bit. And I wanted, this is actually a pretty good example for you guys to go out and relook. I want you to spend 5 minutes on your existing value proposition and just think through. Just, you don't have to have all the answers right now, but on your own, and I'll pick on somebody else for this. Philip, if you want to also give your second view, please do. But the key elements that we'll be looking at here is relevance. We must connect directly with the customer's core problem. In your case, Philip, your customer is the financial institution. Could be a bank, could be a micro lender, could be even a telco. So you must connect directly with the customer's core problem. What is that core problem? And that's what you want to connect with. You have to have a quantified value. What are the benefits of engaging with your solution? Even if it is theoretical or whatever it is, but just, put in a number, something that will excite the listener to make you want to come back. Just give you an example. Today I was searching for flights online for later in the year. And as technology works nowadays, next thing you know, you've searched for flights on Google or using whatever search engine it is. And you go to Instagram, and next thing you're seeing adverts of all sorts of different apps or services that help you book flights or get cheaper flights. So I saw these guys called Reframing, and seemed interesting. But why it seemed interesting, to the point that I followed up with them, is that their proposition is that we'll get you the best rates of flights to over 100 destinations worldwide with up to 90% savings. Now, it doesn't mean that the first booking I will get 90%. They're just saying that it is possible that I'll get 90% savings. And that value proposition was strong enough for me to actually look at their webpage, look at their service. And this is what I'm saying that you guys must come up with. You must express benefits in measurable terms. And then you must differentiate yourself. Clearly state why your solution is better than existing solutions. In the case of Ratepunk, they are saying that airlines are out to get you, depending on where you're going, what time you book, so on and so forth. You could be sitting in the same row as someone who has paid 50% less than you in the same aircraft, going to the same place. So this is what they're trying to pull out to you, and that is their value proposition. So what I would like you guys to do for the next 5 minutes, if you happen to be with team members of your own organization, I won't ask you to break out into groups at this point, but just for the next 5 minutes, it is now 10 to the hour. I'll give you until 5 to the hour when we can come back together and look at 1 or 2 value propositions and see what improvements have been made. So I'll leave it to you guys. So welcome back, guys. I'm hoping you've had a chance to look at your value proposition. Anybody willing to risk reviewing theirs in public? Okay, then I will pick on someone. Safia of Nomad Pro, would you mind just giving us a sneak peek of your value prop?
Sure, I'd be happy to. Can you hear me?
Yes, we can, very clearly. Thank you.
All right, thank you. Our integrated digital platform, Nomad Pro Africa, serves nomadic pastoralists across east and arid regions of Africa who struggle to access essential services for their livelihoods. We connect them to insurance, financial products, veterinary care, livestock inputs, training, and markets through a seamless ecosystem. This improves their resilience, income, and sustainability, unlike traditional models.
Okay. Who is your customer here? Who are you speaking to? Who would that be? Would that be to someone who's financing your business, or is that to a partner?
Ah, okay. Maybe I got it wrong. I think I was thinking it more directly about like the because so in this
No, I
case,
mean,
the way
there's nothing wrong with what you said. I'm just asking, who would that be targeted to? Remember, we said that you usually would want to target your value prop to a persona. So you guys do a number of things, from insurance to financing, specifically around animal husbandry, if I'm not wrong.
yeah.
Yeah.
So I guess
So
there's
if you're talking to the actual farmer who's keeping cattle, would your message change as opposed to if you're speaking to to a partner? So you're looking for funding. You're speaking to an investor. Yes.
Yeah. No, that's a good point. I guess with the phrasing, you want to make it more personal. If it's the farmer directly, instead of giving maybe an overview. This would be more suited, I guess, to a partner. Say if you were working with an NGO or like an international body, but if you were directly targeting the customer, we would focus on what services we provide, or like access to services we provide, and how it will help them improve their sort of like business or their way of life. So that might be for but I guess the change would be that we are Nomad Pro Africa. We are a platform that provides access to insurance. So insurance in terms of something I think called IBLI. That would be I wouldn't be able to give you a proper breakdown. But yeah, so that would be like
No, I mean, don't worry about it. But I think,
so
yeah, you get the drift here, and I'm hoping we'll get one more, which I'll ask Ken to review. But you get the drift if depending on who you're speaking to. So, for example, you're speaking to a farmer who's raising cattle in a drought area.
Yeah.
When you tell him that
Yeah.
I'm giving you access to insurance, he doesn't even know he needs insurance, or doesn't think about what is his pain that you're going to solve. Is it when the cattle die because of a drought? And you see what I'm saying? So you
Yes,
want
no, absolutely, absolutely.
to uncover the real pain so that you're able to position your value in a different way that is understandable to that persona of the farmer or to that investor.
Yeah.
Okay. So thank you so much, and thanks for being such a good sport.
You're welcome.
Shall I pick on someone else? I think we'll go with another lady for now. Diana. I think we have met before, Diana. If you don't mind, you could give us a view.
Hi, good evening, everyone.
Good evening, Diana.
I was trying to follow, but I hope I'll get it right. So our value proposition is so when we're speaking to a client,
maybe first, Diana. Sorry, Diana. Before you continue, I want you to tell us first, who are you speaking to? Who are you positioning this? Yeah, value proposition.
We're speaking to the micro insurer or the short-term insurer who also does micro insurance products. So we are B2B. Yes.
Okay. All right.
Yeah. So Yeah, so we usually say that our microinsurance platform redefines how microinsurance management is done end to end with digital solutions. So we are ensuring there's compliance. We also offer rapid deployment. We're cost effective. And we also make sure that we enhance the operational performance of the organization. So what we're essentially doing is empowering the team in the microinsurance company to streamline their policy issuance, their claims processing and analytics, and also expand their customer reach.
Okay, so you're automating and improving efficiency on their back office of the microinsurance by providing them this service.
Yes, and also expanding customer reach.
Excuse me, sorry, go ahead.
And also expanding their customer reach, taking the product closer to the customer.
Okay, so again, you know, you want to be very clear on that, because I could challenge you and say, okay, fantastic, you're bringing me automation. How will you take me to the customer? How will you get me closer to the customer? And
so
you
our
know
solution,
that's the problem I have.
Yes. So when we talk to our clients, we usually go through the process you talked about earlier. And the issue has been, for them, they want an end-to-end from customer onboarding. And customer onboarding on micro insurance products are usually, how do I get it to that person who is in the rural area, who's not able to come to a brick and mortar? So our solution offers a solution that allows, even when you are off network, to be able to onboard clients or the customers to onboard on their own. So we have a complete end-to-end solution.
Okay, fantastic. Ken, I don't know if you have any comments on that. I think you had some two very good examples there.
Okay. Yes, we've got very interesting examples, a B2B and a B2C. My take for starters, especially when it's B2C, is look at your value proposition, like Diana has just shared and like Safia has just shared. And just a quick question, Diana, what traditional language do you speak? Are you the Kenyan who pretends she's a Zimbabwean? Diana, are you there?
I speak all languages.
Okay.
Because I deal with my clients everywhere.
Okay, so when you're going B2C, and same with Safia, when you're speaking to the farmer, what language does that farmer understand?
The local language.
And the local language, right? Now,
yes.
In order for you to understand, and the beauty about being in Africa is this, English is our second, third language. Therefore, a lot of things are lost, what I call lost in translation. So suppose you translated your value proposition into your local language. How would that sound? Would it then follow the same rules that you're talking about your product and service, which customer segment, who, and what problems are you solving? Yep. Same format as Amazon. But suppose you flipped it to your local language. Most probably your value proposition then would slowly start evolving and become more customer centric. I've got a bit of experience selling insurance, micro insurance, and so on to nomadic communities, and they have a very interesting way of mitigating their losses. Now, when you bring in technology, how do you, like I said earlier, how do you weave that in? How do you weave our value proposition to the language that our customer speaks? I think Andrew has talked a lot about that. In your case, Diana, where it's a B2B, can you state very, very simply what their pain is? Amazon talked about we save you the pain of having going through a mall or going through smaller online buying sites by giving you everything here. So how simple can you make your value proposition to align with what the insurer is looking to achieve, and how do you help them? So when thinking of that, I say in the African context, translate it to Swahili, Chichewa, to Zulu, to whatever language it is you speak, Amharic, etc. And look at that value proposition. How does that sound? Because that will be the beginning of you understanding how to reach your customer. I hope that makes sense.
Thank you, KT. Indeed, it does. Indeed, it does, especially for the B2C. But similarly, again, when you speak of a persona, when you're talking, B2C, the language is literally that language. You might have to change the language that you're using. But similarly, if you're doing B2B, if you're talking to a CFO, the language again changes from a CTO or from someone else who's the head of the healthcare business in a big insurance company. So because they look at different silos within a business and have a certain way that they think of what their pain is. So very, very important point there, KT, and I think no better example of landing that issue of connecting with your target. So this is more or less my last slide around problem reframing, and we have already done this reframing reflection already, but I want you guys to step away from here really thinking about how we will reframe our value towards the customer problem. And it might need you spending some time to re-engage with your customers to understand what their real pain points are, especially the ones that are unsaid. There's a quick example that is given there, which I hear so often when I'm wearing my other hat in the insurance business. Someone comes and tells us we have built an AI-powered underwriting platform that uses machine learning algorithms to reduce fraud or whatever it is. But if you look at the actual problem that the insurance company, the underwriter is having, is feeling the pain from, you would state it in this other way, which is we solve the problem of slow and inconsistent underwriting decisions by providing instant, accurate risk assessments. That is the problem that they have. They don't care about the AI per se. And often, I'm sure you guys in your industries, you probably know that AI is probably the most misused word in the last year and a half. And a lot of people are actually afraid of AI, especially the older generation who probably don't understand it. So, and then lastly, you see that the value proposition, because now you've refocused your thinking to be more problem focused around slow and inconsistent underwriting decisions, your value proposition now reads something like what you can see at the bottom there. Our AI platform reduces underwriting decision time by 80% while improving consistency by 40%, enabling you, the insurer, to process more applications with higher customer satisfaction. Taking you back to what KT mentioned at the beginning, building trust. So simple example there, but I hope it is something that you can take away from this first hour around how you can really look at repositioning your value statement and even having multiple value statements for the different personas that you are engaging with now. When you're engaging with a CEO, when you're engaging with a CFO, when you're engaging with a junior manager whose problem is selling insurance week by week, that's a different, or onboarding insurance customers, as Diana said earlier, that's his biggest problem. So if you tell him that my automation will help you onboard 10 times more customers, for the junior salesperson, that's what they want. For the CFO and the CEO, they want to hear something like what we are looking at down here. So my challenge to you is to go out and after this and review how you position yourselves. What do you think will change in how you present your value? Q&A. Any comments, questions, anything on this first session? We are now 10 minutes past the hour, but I think we should be done with the second bit in about half an hour. And maybe just by a show of hands of anybody who needs a break, or do we push through? If you need a 5-minute break, just put your hand up. I won't call you out, but then we can take a 5-minute break. I don't see any hands. So any questions? Now hands for questions or comments. If there are none, I'm happy to see that that first session has landed with no issues at all. So next week, when we review this, I hope that you guys will come with perfect value props for at least 2 different target personas that you're looking at in your target customer base. Oh, yes, question. Edward.
Yes, I was just wondering, when you're coming up with your value proposition, there should be some limit in the number of words that you're using. Should it be concise? Should it be concise?
Yes, 100%. As Thimba said, if you can look at the Amazon value proposition or any other of these big companies, you'll find that their value proposition tends to be very, very concise, not more than a couple of sentences. Sorry,
okay.
Not more than a couple of sentences.
Thank you.
Yeah. So that will also make you think quite a bit of what the real value is, and taking it away from, oh, this is what we will do for you. We will speed up processing of this or the other, or add this kind of value, because you'll have to think of what the customer's pain point is. Okay, so quick recap: solution fit. What core problem do you solve? Is your problem focused? What is your problem focused value proposition? That's what you guys need to build. And what changes do you need to make in your market approach? So for example, do you have a standard elevator pitch? What is your internal training? Because you remember, by the way, once you're clear with your value proposition, it makes it very easy to even explain to a new hire what it is that you do. A lot of us in the tech industry tend to, to use a lot of verbiage and technical terms and try and make, what we do very complicated. But if you talk to some company, like for example, Apple, they will tell you something as simple as, we are here to make use of technology easy, period. And that grounds everything that they do, so that any Apple device that you engage with is supposed to be easy to use. It should be intuitive. So they will not have for example, a Linux-driven Apple phone, because you'll have to program it and do this and the other. So this should also ground how you do your internal pitch, and will possibly also drive the culture. With the example I've given of Apple, you can go online. There's lots of studies of how the internal culture of Apple is driven by what they do, their commitment to their customers. So think about it in that way. It can have a huge impact in how you position yourself in the market and to your own people. So next topic. This should take us about half an hour or so, but depending on if you have more questions, It might take just a little bit longer. But here, I would like to ask Ken to probably take us through some of the traditional challenges. And here, what we are trying to look at is figure out where is it that we actually play. This is where I want you to think of yourself and your organization. So like I mentioned at the beginning, there's two kind of big parts to this. Either you're an enabler or you're a challenger. So keep that in mind. But even within those two, you play somewhere within this channel. So Ken, if you don't mind, you can take us through some of these traditional channels that we have in the insurance industry.
Okay, great, Forrest. Thanks a lot. So I'll quickly take you through the traditional channels and a couple of other interesting traditional channels, and then Andrew will go on with emerging digital channels. So our traditional channels currently is insurance brokers, or what are called independent agents. Captive agents are sometimes insurance companies call them in-house agents. They work within the insurance company. They are licensed by the insurance company. So the regulation clearly creates a separation of what their roles are compared to independent agents and brokers. Then there is direct to customer, an online platform. You can go online and buy one insurance or the other through a mobile app, etc. And bank assurance. Bank assurance has gotten prominence very recently. It's been around for a while. Banks have not previously looked at it as an active revenue channel, because do not forget, even within those channels, bank assurance is similar to an independent agent or a captive agent. The reason a bank wants to introduce insurance is because they have a customer base, and within their customer base, when they are lending money, or well, first it started off with lending money and for assets, and they would force you, in quotes, to get insurance. But they realize that there's a bigger market there in actually offering insurance. So even when you're thinking of your value proposition, if your strategy is a collaborator strategy, these are guys you can be able to partner with because they have huge databases of people who enjoy different services from them. So those are technically the traditional channels. So why captive agents? Or what do these guys do? These guys go out every day and knock on doors and try and sell insurance. So something that is important to understand is that in Africa currently, purely because of the social aspect of Africans, insurance is not necessarily bought, it is sold. So you would have to go out to people and tell them about insurance. Therefore, your distribution is key. It's a numbers game. You need to be everywhere so that you can be able to interact with potential buyers of insurance. Now, it may not be physically possible to be everywhere, but insurance companies then engage agents and brokers, and the face of agents and brokers is slowly starting to change. It's slowly starting to become the trusted people in society as the distribution channel. So something that happens in South Africa, and it contributes a lot to the growth of their insurance, is that distribution is done by churches in certain communities, more so the Black community. And churches distribute, and people who go to those churches carry themselves with a lot of pride. They did a very interesting thing. They, for those who are not Christians, Christians are supposed to pay tithe. And tithe is 10% of their earnings every month. What the churches did was that they embedded an insurance aspect, and you will see that there. They embedded an insurance aspect in the tithe, in the contribution you give to the church every month. And it was slightly higher. So while you give 10% to the church, there was a 1% that you paid for insurance. Why was the church motivated to embed it? It's because the church is the one that bears the brunt of a loss in a family. So people always go to the priest, or they will go to the imam, or they will go to whichever religious leader they may be in times of distress. So if you're able then to fashion your value proposition to trusted, again, if you you will notice at the bottom of this, the underlying theme here is trust. So when you start looking at even emerging digital channels, look at the traditional channels and ask yourself, do those people build trust? So part of what I do, or what I've done, is I recruit salespeople. And for me, one of the biggest things that works for me in recruiting a salesperson is I ask them, how many numbers do you have? How many telephone numbers do you have on your mobile phone? Because that is the market that you can distribute to. So in sales, that is called your natural market. So you set your agent out, or the person you've recruited, to start off with their natural market, their cousins, their uncles, their relatives, etc. And because of their personal relationship with them, then they're able to leverage that and get them to buy insurance. However, with digital channels, one of the challenges you would face is, how am I then going to communicate this through a trusted partner? That is why successful insurance agents are the ones who have the biggest network, because they build trust. They build the relationship first before offering the service. So traditional channels depend a lot on individual motivation, on that person going out and calling all their relatives, or that person being in a member of a church group, a volunteer at the mosque, a member of the Rotary Club, and so on and so forth. So the characteristics of the traditional channels are that they are able then to reach out to a large network of people who then purchase the insurance and technically use what is called the referral system. People who've already bought then become your evangelists and convince other people to buy, and so, or give you referrals, and you're able to build your numbers that way. So traditional channels have operated purely on individual or company networks. So the biggest bank has the biggest number of customers. It is very easy to start to give them a message that will then be able to attract them to buy insurance. An individual agent or broker, again in Africa, they thrive purely on their network. And if you look at the traditional ways of people are slowly moving to advertising using individuals, the soccer star, and so on and so forth. Why? Because that person has a lot of appeal to the market. Everyone recognizes the name, everyone recognizes their face. So for me, my personal example is, I used to play rugby before I coached, and people would recognize me because, oh, are you the guy who played rugby, or are you the guy who's coaching? So the individual's network is what allows them to sell. Forrest talked about a blog. One of the things that I'm doing to drive traffic to my sales training site is that I write a blog, and I write about many things, but at the core is sales. So I'll write an interesting story, but my key thing is, my channel for distribution is to be able to get people to the blog. At the end of every blog, I ask them to book a meeting, to say hello to us. There's a call to action that is intended to get the customer then to connect with me. So with that in mind, look at how can tech augment that typical salesperson's ability in terms of them being able to reach out to a network, as opposed to just the traditional channel where if this person doesn't show up, then you will not sell insurance. How can we make insurance then, or insurance sales, then a process that depends less and less on individual networks, and we can be able to grow our networks using technology? Yep, that's my 2 cents for now.
Thanks, KT. Sorry about the moving slides, trying to get myself unmuted. So there's a couple of things that Ken has touched on. One, obviously, is the traditional versus emerging digital channels and all that. But I'm sure many of you are well aware of the current push that many insurance companies are struggling with, which is to try and break what has been this traditional model of the agent broker and get closer to understand who their customer. Because as Ken said, many of these agents and brokers use their personal networks to get customers to buy insurance. So they go out knocking on doors and convincing people and so on and so forth. And they are the same people who that the customers trust, that should something happen, the agent will be on my side and push the insurance company to pay my claim. This has also been my personal experience. I've had the same agent, the same broker for the last 20, 25 years since I first started interacting with insurance. So it'll be very difficult for the insurance company to sidetrack this person. But I want you to keep this in mind as you're thinking about where do you play? Are you a collaborator, or are you a person who's here to shake things up? Secondly, something that Ken mentioned is this whole aspect of bank assurance. In Kenya specifically, I'm not sure about other markets in Africa, how fast it is growing, but we now have banks directly going into insurance. They have seen the value of trading in insurance. Many of these have been some of the biggest customers of the underwriters, and now two of some of the top 4 banks in Kenya have now either bought insurance companies to go directly to the customer, or have invested in building an insurance business internally. And because, as Ken mentioned earlier, they have direct access to the customer. So what is happening to this insurer here is that they're getting further and further away from their customers, much to their detriment. So this for you is an opportunity where you obviously can see, okay, this is where I'm playing now, because this is how the market is now, whether you're a disruptor or an enabler. But you have to think about where is the market going, because, for example, I've just mentioned banks. Many of these banks, what they're doing now is just going out and hiring, the top talent that they can find in the insurance industry. But do they need it if you are coming on board with some, technical or digital value add that will help them, really take on or shake up the market in a way that the traditional insurance companies haven't done? So I want you just to keep that in mind as we continue ongoing. I'm not going to go into too much of the detail of the emerging digital channels. You guys know this very well, because this is exactly the place that you play. What I want to touch on briefly, and I'll ask KT to talk about the disruptor strategy. I want you to think where it is that you play. Are you clearly a collaborator? Are you clearly a disruptor? Or are you somewhere in the middle? And And how will the changing marketplace change how exactly you place yourself and where your value is? Going back to the first hour of today's lesson, you want to think of your position in the channel, in the route to market, as part of your value proposition, depending on who you're talking to. If you're talking to a customer, you're able to say, hey, Mr. Customer, insure directly with us. We'll get you insured on the spot as quickly as possible through digital means using mobile money. And should you have an issue, our claim process takes only 2 hours and we pay you back in mobile money. So you remove the friction of the traditional insurance. And that is your value proposition summed up as part of your route to market, as part of your channel. So the collaborator will talk to a broker or will talk to an underwriter and tell them that my advantage is I'll give you access to a larger customer base. We are working within the regulations that are already, in place, put it down by the regulatory authority, and we give you faster market entry, like what the example was given by Diana earlier today. However, you know that you're dealing with a traditional industry that has slower decision-making. There could be cultural clashes because customers do not understand insurance. They're not used to buying insurance. As KT has said, it has to be sold to them. And then there's the issue of revenue sharing, because you're going to white box a product or you're going to be part of someone else's channel, you have to share revenue. So, KT, you want to touch on the disruptor strategy?
Yes, and I have various examples of disruptor strategies. Some not involving insurance, but I'll talk about a disruptor strategy revolving around insurance. And I don't know what you guys think, but I think one of the disruptors that has happened in the last 10 years or so in the insurance industry is Sharia insurance. I don't know how many of you have had the experience of, probably maybe you've been introduced to Sharia banking, but Sharia insurance goes by very many different names. However, the core thing is that it is in line with fundamental Islamic religious teachings. And one of the biggest obstacles to the Muslim communities in Africa in terms of gaining financial inclusion was that the Quran does not accept or condone what they call haram. Yeah? And haram being, for example, giving someone a loan and making interest from it. But Sharia insurance has come around and gone around that, used that religious tenet and said that for Sharia banking or for Sharia insurance, what we do is we spread the loss amongst all our customers. So in what the premiums are actually called contributions. Yeah. So at the end of the year, if we all contributed to underwrite or to insure a building, if that building does not experience any loss, then that means that insurance company has all that money. Rather than the traditional insurance, who are in quotes for profit, who keep all the money, the Sharia concept introduces sharing of those profits. And they say that fine, now we made what are called underwriting profits. Yeah, we collected 100 million in cash. We paid out 20 million shillings. So we have 80 million shillings. What we will do is we will spread that amongst all our customers by way, for example, of discounts on the premiums or the contributions for the next year. That really challenged many traditional insurance companies because then when, again, traditionally as Africans and in the African context, we always frown on people who make unnecessary or unfair profits. So in the cultural context, this was a company that was saying, we are going to take your risk, or all of us are going to share the risk. If someone experiences a risk, we will all pay. And if those risks are large, we may not be able to get our discount in the second year because we have shared the money amongst the community. So that's one way of weaving yourself into local communities' needs and wants and providing a solution that would be a disruptor solution, but you challenge existing market structures, and their approach is totally different. Is that you're not paying a premium, then at the end of the year, nothing happens. No, we are all contributing. So if there are losses, we will all share in the losses. If there are profits, we will all share in their profits. So again, another disruptor strategy, and I'll take an example of a couple of something that we experimented with in Kenya a couple of years ago. There was a very big menace in Kenya of people drink driving, and our car accidents, especially from drink driving and so on, were really, really horrible. But there exists legislation that was introduced to be able to curb that. And the government introduced something called alcohol blow, where you blow into this gadget and it says whether you are above the limit or below. Immediately, what happened was everyone was thrown into a panic in terms of then how do I get home and I might be over the limit. So together with a couple of friends of mine who, interestingly enough, were in insurance, we came up with a service where we started driving people home. So we would say, hey, you go to your club or wherever you enjoy your drink, have your drink to your fill. But we will be able to beat the police by giving you a sober driver who will drive you home. So it was very interesting because we sort of upset the apple cart. And in Nairobi, the police used to know the vehicles we used to have, and they used to point at us because they knew that we were typically, or rather we were, in every sense of the word, carrying guilty people. But in this case, these guys are not guilty because they are not driving any vehicle. An interesting thing that happened from that strategy of ours of disrupting the market was that we ended up partnering with the biggest distributor of alcohol in East Africa. As opposed to us going to collaborate, they decided to collaborate with us because we had a don't drink and drive policy that they need to be out there and to encourage people to drink responsibly. Now, the interesting thing about that story is that we also got disrupted. Many people think that because this happened just before the advent of Uber, many people think we got disrupted by Uber, but we were really not disrupted by Uber. We were disrupted by Google Maps and WhatsApp groups, because Kenyans, being Kenyans, became clever and started looking at Google Maps to see where police had put up roadblocks, and they would set up alternate routes to go around, and they would communicate them on WhatsApp groups. So again, like Forrest had said earlier, your value proposition also needs to be dynamic and needs to keep changing. Yeah, but a disruptor strategy, you have to be very, very brave because you have to build trust from scratch. Then there's, like is pointed out there, regulatory hurdles. But the key thing is, what is your acquisition cost? So where you are a collaborator, with an insurance company, we said that our acquisition cost, we will collaborate with clubs that have membership, and that is how we will build trust. Because as long as we go through the hurdle of convincing the club that we offer chauffeurs or responsible drinking, and the club vets us, then that's our route to the customer. But other than that, it would have been extremely high acquisition costs. And also, I mean, if you think of whether it's social media, above the line advertising, below the line advertising, it would be very expensive to get your message out there. So think about disrupting insurance. What market structures then will you challenge? Will you challenge the traditional broker agent distribution? Because remember, one of the challenges we have in Africa is distribution of insurance, a lot because of the language and the complexity, and at the bottom of it, trust. So when you're challenging these existing market structures, you want to be able to still communicate the fundamental message that insurance offers, which is protection. So you want to be that trusted voice that offers protection. Then the acquisition cost might not be that high. But again, disruptor strategy, think of the market structure, what exists, and how can we change that? How can we blow it out of the water with our approach using technology and technology tools, which I believe can move us to the next level. That's all for me for now. Thanks.
Thank you so much, Katie, for really painting a picture on that. And I think going on to the next couple of slides, I only have a couple of more slides left, is, you know, the homework I want to leave you guys with is looking at what channel should we use, and taking into account the fact that most successful insurtechs, and actually in most new uses of technology to get to customers, use a hybrid of traditional and new technology. So it's a bit about using the muscle of those who are already in the industry and using what you're bringing on board to add value. So it usually is a mix. This is also true because you find in many markets, the regulator has a huge say in what it is that you do and how it is that you do it. Sometimes you may find that the regulator is not really awake because the market is small or the rules are a bit loose. But once they start seeing you become successful, for sure, I can tell you for a fact that they will come after you to try and put you know, barriers around how it is that you operate. So in terms of your channel selection, align yourself strategically. Whether you're a collaborator, figure out where in the channel you operate, whether it is white label solutions, API integrations, partner channels, so on and so forth. If you're a disruptor, think about direct to consumer, digital platforms, new distribution models. Many of you guys are already doing this. Think, is it multi-channel or omni-channel? Some of you who have spoken already are talking about multi-channel models of going to market. Some of you might be omni-channel, where you're looking at just one way, one method of going after the market. But this has to be a very clear part of your route to market. And then measure. How do you measure success? How do you measure effectiveness? Is it through the customer acquisition cost? Because these are things that will become part of the value that you speak to the market, to the regulator, to your partners, whether if you're doing B2B. Is it conversion rates? Is it customer lifetime value, partner satisfaction, channel attribution? Find out what are the most critical metrics that you need to measure so that you know you're being successful. These will also become very critical when you're launching, when you're going for investment funding, when you're looking for people to put money where their mouths are in your business, or when you're looking to exit. Many of you guys are startups with probably a dream that you'll build a business to this size and then exit. If you're not measuring the effectiveness of your ideas, then you'll fall flat on your face, or you will be, worse still, bought for a song and somebody else will make that money. So in terms of your canvas, your channel strategy canvas, what I want you guys to think about is, who are you trying to reach? And we are not going to do this now. I'll leave this with you because we are getting close to our 2 hours. So I want you to think about, who are you trying to reach? What channels are you using? What is your strategic position? Are you a collaborator, a disruptor, or you are a blend? Are you a hybrid? And let that be very clear to you, because it becomes part of your value proposition. And then think about the key advantages and challenges of that position, because that will help you also think about the future. Like I said, the market fundamentals are changing a lot. There are new players coming into market. If you think about these key advantages and the challenges, you might find yourself actually looking at a different approach to market. You might, instead of looking at the traditional underwriters, you might be looking at banks now who are trying to get into the market. You might be looking at international partners who are trying to break into new markets in a new segment of the insurance industry. So I want you to think about this, your channel strategy canvas. I will share this slide so that you can see it clearly, but build out on each of these areas. So the bits of homework you want to do is, first, your value proposition, and then build your channel strategy positioning. So in terms of next steps, reevaluate your value proposition using the frameworks discussed. We talked about those in the first hour, and then complete your channel strategy canvas with your team so that you map the existing channels in your market. You define your position in the spectrum of collaboration or disruption, and align your channel selection with your strategic position, the position that gives you the most power. That power turns into success in the future of your business. And I'll be happy to review these with you in the future, whether we meet face-to-face in Lusaka or on our one-on-ones that we'll have over the next few weeks. And with that, I would like to leave you with a question before you ask your questions. If your organization didn't exist, will anybody miss you? That is where you will find your value proposition from. That is actually the definition of your value prop. So any questions, comments before we close the session? Feel free to use the chat box as well if you have any questions or comments. So with that, if there are none, I would like to thank you so much for your time. I would like to thank my co-host, Ken Thimba, for really, bringing this conversation to life. Like I said, I'm available on Tuesday afternoons. Andrew from Telistic, you'll be able to organize these in my calendar with the guys who would want to have one-on-one sessions to go through some of the stuff that we have covered. A couple of books there that you can look out for that will help you build a lot more muscle in these two areas. The Lean Startup by Eric Ries, this for problem validation concepts, and the Value Proposition Design by Alexander Osterwalder. for value proposition canvas. So thank you again, guys. Look forward to seeing you next Thursday and really appreciate your time and collaboration. Have a good evening.
Thank you. Have a good evening.
Thank you, Andrew.
See you guys. Take
Thank
care.
you.
Nice meeting you.
Thank you, Ken.
Yeah.
Thank you, Andrew. Thank you. Next time.
Bye-bye.